Assalamualaikum warahmatullahi wabarakatuh. My name is Rabatri Shaila binti Muhammad Faiz. So today our group 2 will present about the concept of the Islamic investment based on ETF. Okay, we move to the introduction that Islamic investment refer to an investment approach that is guided by the Sharia principle, which emphasizes fairness, transparency, and social responsibility, where profit must be generated through halal and ethical means while avoiding practice such as riba, horror, and maisir. In line with the rapid development of the global financial market, the Islamic capital market has introduced modern investment instruments such as exchange trade fund (ETF), which are known for their liquidity, transparency, and cost efficiency. So, an Islamic exchange trade fund Islamic ETF is a Sharia-compliant investment fund that tracks a specific index or asset while applying Sharia screening and supervision and also income purification process, ensuring that the investment not only achieve financial objective but also remains consistent with the Islamic ethical values.
My name is Nurul Fatih Natasha binti Muhammad Anis. I will present about concept of Islamic ETF. Okay, an Islamic ETF is a collective investment scheme that invests in a Sharia compliant index. All assets in the Islamic ETF undergo strict Sharia screening, which includes an assessment of the nature of business activity, financial ratio, and the sources of income. This screening process ensures that only Sharia compliant investments are included in the funds. The Islamic ETF emphasizes diversification in its investment structure in order to reduce investment risk and stabilize returns. Through diversifications, investors are able to gain exposure to the market without violating Islamic principles. In addition, the Islamic ETF incorporates ethical value, social responsibility, and fairness in its investment approach. Overall, the Islamic ETF serves as an investment alternative that balances financial return with Sharia compliance. Next, I will explain Islamic ETF structure. Okay, in this diagram, there is a Sharia advisor or Sharia committee. Their role is to provide advice on Sharia issue and ensure that all investment are Sharia compliant. Any non-compliance income is purified before it's distributed. Next, the manager is responsible for managing the funds and selecting a basket of Sharia compliant security. All investment decisions are made based on market condition but are still subject to Sharia oversight. On the right hand side, there is the trustee. Okay, the trustee is ensure that the ETF assets are securely held and segregated from the manager's asset to protect investor interests. The middle section of the diagram shows the cooperation of the Islamic ETF involving participating dealer. This is where the creation and redemption process occur. For in-kind creation, a basket of security is exchanged for new ETF unit. For in-kind redemptions, existing ETF units are exchanged back for the basket of security. At the bottom, there is a liquidity provider who help to ensure that the ETF is easily tradable and the prices remain stable through the in-kind creation and redemption process. Finally, on the left-hand side of the diagram, the investor interact with the stock exchange. Investor can buy or sell ETF unit on the exchange during trading hours. Buying and selling ETF units allow investor to gain exposure to a Sharia-compliant portfolio of security. In conclusion, this structure is to ensure that the Islamic ETF is managed in a Sharia compliant, transparent, and fair manner, giving investors confidence in their investment.
My name is Nurhasika binti Mak Mustaqim. This slide explains Sharia screening and compliance in Islamic Exchange Trade Fund or ETF. Islamic ETF differ from conventional ETF because they must comply strictly with Islamic law, ensuring investment are free from prohibited elements such as riba, gharar, and maisir. The Sharia screening process involves two main stages. First is qualitative screening, which focus on the core business activities of companies. Any entities involved in non-Sharia compliance activities such as interest ban or financial service, gambling, alcohol, tobacco, pork-related product, adult entertainment, and other prohibited businesses are excluded at this stage. This ensures that investment align with Islamic ethical values. Next is quantitative screening, where companies are evaluated based on a financial ratios. This includes limit on interest-bearing debt, non-permissible income, and other financial elements that may involve riba. Although the exact thresholds may differ between jurisdictions, the objective remains the same, which is to minimize Sharia non-compliance. In addition, Sharia compliance does not stop at screening alone. Islamic ETF are subject to ongoing monitoring as changes in market condition or company operation may affect their Sharia status. Finally, Islamic ETF are overseen by a Sharia supervisory board which review compliance, endorses screening decisions, and issues Sharia opinion or fatwa. In conclusion, Sharia screening and continuous monitoring ensuring that Islamic ETF remain ethical, transparent, and fully compliant with Islamic principles.
My name is Sarah Isatimti Hamdan. Next, I will present about example of Islamic Exchange Traded Funds ETF in Malaysia and global. The first one example in Malaysia is My ETF Dow Jones Islamic Market Malaysia Titan 25. This ETF invests in the 25 largest Sharia compliance companies listed on Bursa Malaysia. The main advantage of this ETF is stability, as it focuses on large capitalization companies that have already passed the Sharia screening process. The limitation is that only focus on the Malaysian market. So, as a result, diversification is relatively low and its performance is highly dependent on Malaysian economic condition. Second is Trade Plus MSCI Asia Ex Japan's Islamic risk. This ETF provides exposure to Sharia compliance real estate investment thus in the ASEAN region, excluding Japan's. It applies a smart beta approach when it selects risks that are financially strong and have the potential to provide regular income through rental returns. Why this ETF is suitable for investors seeking consistent income and also face challenges such as low market liquidity, dependence on the property sector, and higher exposure to regional market volatility. Next example in global. First is iShare MSCI World Islamic UCITS ETF. This fund tracks the MSCI World Islamic Index, which consists of Sharia compliance companies from developed countries around the world. It uses a full replication method, means it's buy or the store in the index to closely match its performance. Its management cost is considered competitive and dividends are distributed semi-annually. However, the fund is still exposed to risks and such as global economies, uncertainty, currency fluctuation, and different in Sharia screening standards across countries. Second is SP Fund S&P 500 Sharia Industry Acceleration ETF, which tracks the S&P 500 Sharia Industry Acceleration Index. This ETF excludes industries that do not comply with Islamic principles, even though it provides access to the US market in a Sharia compliance manner. The fund is considered non-diversified, meaning there is a higher concentration of investment, and its performance is heavily influenced by the economic condition of the United States.
Okay, next about the comparison between Islamic ETF and conventional ETF. So we have 5 comparison between the Islamic ETF and conventional ETF. So first is investment screening. Islamic ETF only invest in companies that pass the Sharia screening process. This means the company must not be involved activities such as interest based on the financing, gambling, and alcohol. In contrast, conventional ETF focus mainly on market performance without religious or ethical screening. Okay, second is about the perspective governance. Islamic ETF are supervised by the Sharia advisor and Sharia committee. Regular Sharia audits are conducted to ensure continuous compliance. Contrast with the conventional ETF, however, are governed only by general capital market regulations. Okay, third comparison is based on operational mechanism. Islamic ETF avoid interest based on the practice. For example, securities borrowing and lending must follow Sharia compliance structure. For the contrast, conventional ETF are allowed to use the interest based on mechanism for efficiency and liquidity. Okay, comparison 4 is about Islamic ETF apply on income purification process. If there unavoidable non-compliant income, which is then channeled to charity. So this practice does not exist in conventional ETF. Okay, last comparison is about underlying asset commodity. So for commodity based on ETF such as gold, Islamic ETF must be back physical asset and trade on the spot basis, while the conventional ETF may use derivative without holding the physical commodity.
My name is Sitiruka Antasha, and for this part of the presentation, I will explain the advantages of Islamic Exchange Trade Fund or Islamic ETF. The main advantage of Islamic ETF is that they are fully Sharia compliant and all underlying assets are screened to ensure that they are free from prohibited elements such as riba, gharar, maisir, and non-halal business activity. This allows Muslim investors to invest with confidence and peace of mind. So the second one, Islamic ETF promote ethical and socially responsible investment, which is in line with the objective of Maqasid Sharia. The focus is not only on financial return but also on moral value and fairness. Furthermore, Islamic ETF provide portfolio diversifications as investor can gain exposure to various Sharia compliant sector and companies through a single investment instrument. And lastly, Islamic ETF offer high transparency and liquidity because they are traded on the stock exchange, which is similar to conventional ETF, which is making them easy to. However, despite these advantages, Islamic ETF also face several challenges. One of the main challenges is limited market size and liquidity compared to conventional ETF, as the number of investors in Islamic ETF is still relatively small. And the second challenge is the limited investment universe due to strict Sharia screening requirement. This can lead to sector concentrations and reduce diversification opportunities. In addition, difference in Sharia interpretations across countries and Sharia advisory board may result in cost latencies in asset selections, which can affect investor confidence. And finally, Islamic ETF may involve higher management and compliance costs due to continuous Sharia monitoring, audit, and governance requirements. In conclusion, Islamic Exchange Trade Fund represents an important innovation in the Islamic capital market by combining modern investment mechanism with Sharia principle. Islamic ETF provide halal, transparent, and ethical investment opportunities while supporting sustainable wealth management. Although the Islamic ETF face challenges such as limited liquidity and differences in Sharia standard,
Their growth potential remains strong. With continued regulatory support and increasing demand for ethical investment, Islamic ETFs are expected to play a significant role in the future development of Islamic finance.